B&FT Digest. We serve you with the latest business stories that made headlines within the week. My name is Lily Pearl Baba Otu. In the headlines, insurance penetration in Ghana stagnates for 5 years at only 1%. New World Bank report forecasts that the implementation of the Africa Continental Free Trade Area could lift 100 million people out of poverty in the continent. And still on World Bank, the Bretton Woods institution has advised government to spend wisely in order to close the country's huge fiscal gap. And the Securities and Exchange Commission has issued new capital requirements for all market operators in Ghana. Now the news in details. Even though the insurance industry continues to record annual growth, its contribution to the overall economy, measured by premium income to GDP, otherwise known as insurance penetration, has remained around 1% since 2014, data from the Bank of Ghana has shown. The Financial Stability Review report has shown that the industry's growth in premium income increased from 18% at end December 2018 to 22% at end December 2019, with total assets also growing at an annual rate of 19% to 6.54 billion Ghana cedis within the same period. Despite this growth, however, insurance penetration has remained unchanged for the past 5 years at around 1%. The low level of insurance penetration, the report says, indicates there is a huge potential for the industry to grow if opportunities are tapped. For the industry to change what has become the status quo, founder and CEO of Africa Securities and Insurance Advisory Company Limited, Mr. Solomon Latte, told the B&FT that players in the industry must intensify education and sensitize efforts in addition to prompt settlement of claims in order to increase trust in the sector and attract more potential clients. And a new report by the World Bank has revealed that the implementation of the Africa Continental Free Trade Area has the potential to lift about 100 million people from poverty if countries commit to the agreement and put in the necessary reforms to make it happen. According to Africa's Pulse reports, the continent's trade pact can lift an additional 30 million people from extreme poverty and 68 million people from moderate poverty. It adds that the headcount ratio of extreme poverty in Africa is projected to decline to 10.9% by 2035 from 34.7% in the latest estimate. Full implementations of the AFTA would contribute to a further decline by lifting an additional 1.5% of the continent's population from extreme poverty. The report further states that in West Africa, the poverty head count will decline by 12 million people, while the declines in Central Africa and East Africa would be 9.3 million and 4.8 million respectively. Still on the World Bank, it has intensified its call for Ghana and other African countries to spend wisely and implement innovative strategies which will broaden the tax net to capture every income-generating activity in order to close the vast fiscal gap induced by the pandemic, adding that the situation has further heightened the country's risk of debt distress. In its Africa's Pulse report, the Bretton Woods institution noted that Ghana is among the countries which are expected to see fiscal deficits increase significantly to hit double digits by the end of 2020 due to loss of revenue and increased spending. This, the bank says, will further shoot up public debt in the year. The country now has its public debt figure standing at more than 263 billion Ghana cedis, representing 68.3% of GDP, with external debts forming the largest part at 35.8% of GDP. Meanwhile, revenue mobilization in first half of the year fell short of its targets by 26%, resulting mainly from shortfalls in oil revenue, customs receipts and non-oil non-tax revenue. Total revenue and grants for the period amounted to 22 billion Ghana cedis, compared with a programmed target of 29.7 billion Ghana cedis. And in our final story for today, the Securities and Exchange Commission has issued a comprehensive set of new capital requirements for all market operators in Ghana's fast-growing capital market, with December 31st, 2021 deadline for existing players, but new entrants are expected to provide the new capital before a license is issued. The segments with the highest members, fund managers, are required to raise at least 2 million Ghana cedis. Individual corporate advisors are required to raise 200,000 Ghana cedis. Securities depositories are expected to raise 50 million Ghana cedis. Securities exchange are expected to raise 10 million Ghana cedis. And primary dealers, mainly banks, are expected to raise 400 million Ghana cedis. A statement from the Commission explained that the new directive is in accordance with Section 209 of the Securities Industry Act 2016, which is in line with the Commission's mandate of regulating and promoting the growth and development of an efficient, fair and transparent securities market in which investors and the integrity of the market are protected. And it's a wrap on the B&FT Digest. Always remember to grab a copy of the B&FT newspaper or simply visit our website, thebftonline.com, for more stories. You can also subscribe to our digital version, and don't forget to follow us on all our social media platforms. It's still Pink October. You need to go out there and get tested for breast cancer. My name is Lily Pearl Baba Otu. Have a lovely evening.